Hello students, hope you are all doing well. Our today's topic is Indian financial system or financial institutions or markets from 5th semester Bcom, and it is also useful for the first semester Bcom SAP syllabus. Okay, and our today's topic is Introduction to Financial System. In our today's class, we'll learn the meaning and definition of financial system and the components of financial system. Okay. So, meaning of financial system. It refers to a set of complex and closely connected or interlinked financial institutions, financial markets, financial services, and financial intermediaries. Basically, financial system is the combination of all these which facilitates the flow of funds from the surplus units to the deficit units. Okay? Next. Components of financial system. What are the components or what are the different constituents of financial system? The first one is financial institutions. Financial institutions are the intermediaries which facilitates the smooth functioning of the financial system by making investors and borrowers meet, mobilize the savings of the surplus units and look at them in productive activities, promising them a better rate of return. So these are the institutions which facilitates the smooth functioning of funds, where the investors who is having excess of money, they will invest it into the financial institutions, and these institutions provide the surplus units to the one who need it or who require it. Okay. The next one is the financial services. These are the services provided by the finance industry, which encompasses a broad range of organizations that manages money, including credit unions, banks, credit card companies, insurance companies, investment funds, and some government-sponsored enterprises. So, financial services includes all those services that is provided by the finance industry. Which are the institutions associated with it? They are the credit unions, the insurance companies, and other government-sponsored enterprises also facilitates these sort of services. Okay. The next is the types of financial services include fund-based services and the fee-based services. The next one is financial market. A financial market is the place where the people and entities can trade financial securities, commodities, and other financial stocks at low transaction costs and at prices that reflect the supply and demand. Here, the financial securities includes the stocks, the bonds, and other financial securities. And the commodities that is being traded in the financial markets includes the agricultural goods and the precious metals that is being traded in the financial market. Okay, so the types of financial market includes the primary market and the secondary market. Is the financial intermediaries. Financial intermediaries consist of channelizing the funds of surplus and deficit agents. These are the firms that provide services and products which customers may not be able to get on their own by themselves. They act as a middleman between the savers and the investors in financial system. So students, financial intermediaries is nothing but they are the agents for the investor and the borrower. For example, the one who is willing to invest in the securities, these financial intermediaries like the stockbrokers, the sub-brokers, the agents will trade on behalf of the investor, and they will flow the funds from the one who is willing and the one who it needs it. Okay. So the types of financial intermediaries includes the capital market intermediaries and money market intermediaries. And the last topic for today's class and the last component includes financial instruments. These are the assets or the contracts that can be traded in financial markets. Common examples include the stocks, bonds, derivatives, which is a different way for investors to earn money, and it acts as a protection against risk. So students, financial instruments are the instruments that is being traded in the financial market, which includes the money market instruments like the treasury bills, the bills of exchange, the promissory notes, which is being traded basically in a financial institution like bank. Okay, and the other financial instruments like the secondary market instruments includes the stocks, the bonds, the debentures, which is being usually traded by the huge financial institutions or government companies. That's it for this day, students. We shall meet you soon with another video. Till then, keep learning, keep studying. Take care. Bye-bye.